I am expecting a bounce. It's been a very sharp decline. We all know that V-shaped recoveries tend to come out of very sharp declines. Whether that goes to new all-time highs or is a lower bounce akin to November 21 versus May 21 remains to be seen. As a cycles trader, I expect there to be a 4-year cycle, 4-year cycle low around Q3, Q4 next year. So a number of things can happen, and ultimately this is going to come back to it can go up, it can go sideways, or it can go down, but we may still see new all-time highs.
Everybody, and welcome to the Mouthy Money podcast. I am joined today, as ever, by my good co-host, Chris Chu. Chris, hello, how you doing?
Hi, Ed. How's it going?
Yes, not too bad, thank you. We're really in the run-up to Christmas now, so we're starting to do things like reviewing what the year that has been and the year that is to come. And to do that, we are joined by perhaps one of the most popular episodes of Mouthy Money this year. We are joined by Daniel Parkinson, who is also known as the Bitcoin IFA. Dan, hello, welcome back to the show. How are you doing?
Hi, chaps. Great to be here. Pleasure to be here.
Brilliant. I think, so as I said, we had you on earlier this year. I think it was in August time now. And we were really looking at the time, the kind of the unbanning of Bitcoin products for the kind of mainstream market in the UK. So those kind of ETNs and this sort of thing. It was a super, super popular episode, I think, because we were able to just discuss really the nuts and bolts of Bitcoin and the thesis behind it and that sort of thing. And that really, people really, I think, resonated with that in a way that was really great. We will put a link back to that original episode in the comments, etc. So please do take a look if you are watching already. But today's episode, we are going to be looking a little bit more topically at Bitcoin, kind of what's been going on this year for the crypto asset. I guess you would, although I don't know, Dan, do you like the phrase crypto asset? I'm not quite sure.
I don't mind. Prefer a digital asset.
Digital asset.
And as long as we highlight that Bitcoin and crypto are not the same.
God, yeah. That's just sent my head in a tailspin. Right, we need to get into that.
We'll get into that. So look, okay. I mean, just to start things off, Chris, I mean, obviously we've seen the unbanning through the FCA and that kind of thing. I will freely admit at this point that I have not been able to acquire anything in my ISA or pension because my pension provider still doesn't allow me to own Bitcoin in my pension.
God, TikTok, Ed, you're missing out.
Should we name names, or shall we not start forcing rights of reply and that kind of thing for the time being? I don't know. There are a few that are offering it. And Dan, what's your kind of, I mean, how do you feel about how things have gone since things were kind of unbanned? I don't like the phrase unbanned, but things were supposedly normalized. How do you feel like things are going?
Yeah, the ban was lifted. So so the FCA lifted their own self-imposed ban, right? And they've allowed crypto ETNs, as they've called them. So Bitcoin and Ethereum ETNs from a handful of providers, and then the platform providers are all sort of all over the place. Some have allowed it. I know that Interactive Investor, Trading 212, Saxo have allowed them, and some others are to come. So you can probably figure out which one that's with there. It was a welcome piece of legislation, or lifting the self-imposed ban. I felt the FCA were doing it through gritted teeth. So even when they lifted the ban, they still, made sure to highlight that you can still lose all of your money and it's incredibly high risk. And I am able to purchase Bitcoin and Ethereum ETNs through my SIP provider and ISA provider. You do have to pass a test to ensure your eligibility.
How'd you get on, Dan?
I actually failed one of them.
Really shocked to hear that. I thought you would have the highest score in the country, no? Anyway,
so I failed one from quite literally a tick box exercise. So I didn't tick the correct box, but right. But the questions themselves I can see being quite unsettling, quite challenging for some people. I mean, you have to readily accept that you can lose all your money with these investments. Whereas, someone investing in the S&P 500, for example, you wouldn't have to do that. But we've seen significant drawdowns, not since 1929, but we have seen 70 to 80 to 90% of the stock market's value fall. And because of that volatility, the FCA still seem to be trying to push people away from investing in these assets, but have lifted the ban, as I say. I felt, personal opinion, through gritted teeth, and I've heard various rumors as to why they did that, which I'm not going to air publicly, but it was through gritted teeth. In terms of how it went about, we had some finger pointing between the LSE and the FCA, I believe. So both of them, like the Spider-Man meme, pointing at each other saying that, we can't move until you do this. And in terms of the product providers, so not the platforms themselves, but the product providers like 21 Shares, Wisdom Tree, Bitwise, those guys, there was a lot of uncertainty for them in terms of listing on the LSE and putting in their prospectuses and having them signed off. So it could have gone smoother is probably the politically correct way to put it. And I think we're still making our way through murky waters.
There's also like weird sort of additional stuff that came up afterwards in terms of the treatment inside ISA products and that kind of thing. And look, we've had the budget recently. The treatment of ISAs is just getting more and more surreal. This is not a Bitcoin conversation, but the stuff around cash ISAs is going a bit, frankly loopy, some of the stuff in there. And we had a bit of that as well, didn't we? Was it from HMRC talking about, well, you can have it in a stocks and shares ISA for now, but from April, it's got to be in an innovative finance ISA. It's all just a bit weird, isn't it? It's slightly strange decision-making that doesn't quite add up.
And that came out after the 8th of October, I believe. So the 8th of October passed, everyone was like, yeah, we can now buy it within our ISAs, except no product providers are signed off on the LSE. So then eventually we got that through a few platforms. And then HMRC came out and said, oh yeah, by the way, you've got a 6-month window to hold this in your stocks and shares ISA. And then from the 6th of April next year, it has to be held within an innovative finance ISA. And that throws up a few questions, right? Because most platform providers don't provide innovative finance ISAs because, and I'm a qualified financial advisor, used to be a financial advisor. I had never heard of an innovative finance ISA until HMRC released this information and then had to go and research what these things were. And they're an incredibly niche product that is essentially for peer-to-peer lending, right? Financial advisors don't go anywhere near them. So we're in a situation where either on the 5th of April, 2026, all of the platforms are going to make anyone who has crypto ETNs within their stocks and shares ISA a forced seller, or they'll just move them into a GIA, a general investment account. So then what do you do for the tax-free gains or losses between now and the 5th of April? Do they carry forward or do you lose those? And then, are the platform providers going to launch innovative finance ISAs? I would suggest not. Personal opinion, I personally believe that rule will get rolled back. But obviously, I don't know that for a fact. It's going to end up being a bit of a saga, I think.
Yeah, I'd say there's probably quite a compelling argument that the government's probably not going to get its act together in time to make sure that people don't end up losing out in one way or another in order to push that out a little bit. And Chris, have you upped your Bitcoin holdings?
I haven't. No.
I
was convinced by Dan. Your argument at the time was very good. I just haven't. Practically, I've been doing other things with my money. I think actually, if zooming out a bit into my journey with Bitcoin as an asset, obviously me and my friends, I think you'll remember from the last conversation, took a bit of a speculative punt on it in the pub and all decided we're going to learn a bit more about this. We're going to put some money together, right? This year, with everything that's gone on, has made me feel a lot better about that. Then we had a lot of sort of institutional signals and money moving into it as an asset, and that sort of made me feel a lot better about stuff. Then you had the relaxing of the rules towards the end of the year in 8th of October in the UK, and then in other jurisdictions it's been like that for a little while. And so all the direction of travel on this makes me think that money, I feel far more secure about where that money is based on all of that sort of stuff that's happening in the background. Not to mention, and I know price isn't something you should look at if you're investing in something for the long term, and we are planning to buy and hold it. But, it did hit all-time highs of around about $120,000, I think, around about the spring summertime. And then it's obviously retrenched a little bit back from there with general sort of market moves happening and people kind of cashing in, I suppose, on those movements. But So on the whole, Ed, if you're asking me whether I'd be convinced to buy some more, yes. I think practical considerations about my own portfolio and some of the other episodes we talked about have meant that I haven't quite got to that point yet. But as an asset class, I feel far better about it sitting here in December 2025 than I did in December 2024. I think it's been on a hell of a journey, and it's continued move towards complete credibility, and it's done. It's already there. It's an important asset class as part of the mix, I think.
So yeah, you mentioned there the all-time high. I think, I mean, the irony of that was it came the day before the FCA actually lifted its ban. It was on the 7th, was it something like that? And I think, I mean, stuff's obviously gone down a fair bit. It's around 20-21% down since that point. But if you stretch that out over to the beginning of the year, it starts to look a lot less painful. It's kind of 6% or something like that. Now, Dan, I know you've got, I remember you said in the podcast before, and I know we keep referring back here, but you did mention when we talked last time that you were kind of ready for a cycle down in the near enough future. So is this kind of what you were anticipating already? And I know that you've told us you're a cycles guy, so you look at this in terms of that. So is this kind of expected? And what do you think people need to be who are interested in how things are moving, need to have in mind moving forwards?
Great question. So there's a few things you've touched on there that let's make sure we try and hit them all. So you've touched on short-term price volatility. But you've also touched on cycles and then longer cycles as well. And how can people sort of plan around those, right? So there's 3 or 4 things there. So let's try and work through them in order. In terms of the short-term price volatility, I am a cycles trader. And what that means is every asset has a daily cycle window, a weekly cycle window, and then a yearly cycle window. So you tend to chain together 4 daily cycles to then get a weekly cycle. And then the yearly cycles, Bitcoin is 4 years. So typically the daily cycle is about 60 days. So if you chain 4 of those together, it's 120, 240 days. So you get roughly 2 weekly cycles a year. The last weekly cycle low was in April and dropped to about $75,000. Over the course of the next weekly cycle, it went up to 126, 127. A pullback into this weekly cycle is expected within the theory of cycles trading. What happens from here is uncertain, right? So I am expecting a bounce. It's been a very sharp decline. We all know that V-shaped recoveries tend to come out of very sharp declines. Whether that goes to new all-time highs or is a lower bounce akin to November 21 versus May 21, remains to be seen. As a cycles trader, I expect there to be a 4-year cycle, 4-year cycle low around Q3, Q4 next year. So a number of things can happen, and ultimately this is going to come back to it can go up, it can go sideways, or it can go down. But we may still see new all-time highs. Some of the fundamentals in the background, some of the on-chain data seems to suggest that we've got massive whales accumulation. Some of the on-chain sort of fundamentals, which I can't think of off the top of my head now, but they're all flashing signals that seem to suggest Bitcoin is going to rip to new all-time highs. But we don't know that for certain, right? One of the things we have seen from on-chain data is that a lot of very dormant wallets have come online again, right? And we're talking wallets that haven't moved in 10 years. So these people were buying in the triple digits, hundreds of dollars. They hold dozens of thousands, if not hundreds of thousands of Bitcoin, and they have come online over the course of this year. So they were clearly waiting for that 100,000 figure. If we think that we're currently mining 3,000 Bitcoin a week, estimates are that Bitcoin treasury companies alone are hoovering up a demand of about 10,000 a week. So that supply has to be coming from somewhere, and it's coming from those OGs. There was a weekend a few months ago now where a wallet that had 125,000 Bitcoin that hadn't moved in 10 years sold 25,000 Bitcoin around the 100,000 mark. So they picked up a cool $2.5 billion and they still have 100,000 Bitcoin in their wallet. What we're seeing is, and this is very healthy, right? So what we're seeing is decentralization in action, because when you have a number of very large holders of Bitcoin, it sort of centralizes the token to an extent. So we want that distribution. But that distribution comes with the opposite of a massive run up in price, right? A sort of Wyckoff distribution, which is more that we're seeing at the moment, right? So this cycle, if it doesn't go on a massive rip in the next couple of months, I would suggest we're in the classic Wyckoff distribution, and then we head down to those 4-year cycle lows. Just want to preface and highlight again, none of this is personal advice. Professional financial advice. This is all my personal opinion.
Yeah, 100%.
So I think that sort of covers off the short-term volatility, right? So yes, we would have expected a weekly cycle low. We're literally in the window for it now. It looks like, as we record this, we've had a swing in the last week or so, but it doesn't mean that, we rip to new all-time highs. We can go to a lower high. We can just bounce around where we are and then head down to that 4-year cycle low. So it can go up, it can go sideways, it can go down in the short term. Mid-term, I am expecting a 4-year cycle low, Q3, Q4 next year. And then in terms of how can people play that? Well, then I often get financial advisors reaching out to me on a personal level and saying, is now a good time to buy Bitcoin? And I would always push it back onto them and say, if a client came to you and said, is now a good time to buy the stock market, what would you say? So, and it's the fundamentals are the same. If you're going to lump sum in to minimum hold of 4 years, the FCA recommends minimum of 5 years. I would suggest you want to be looking in the 5 to 10 year range if you're lump summing in. If you're DCAing, so dollar cost average, or in the UK, we would call it PCA, pound cost average. So you're buying a set amount over a set period. So you buy daily, weekly, monthly, etc. Then I would suggest it's always a good time to buy Bitcoin. I personally buy it every day, and I forget about it for 10 years.
Yeah, interesting. I mean, I think because it comes down to the sort of thing, well, if you believe in the thesis of it, then the same rules would apply to any other investment. It's just, it comes down to what your appreciation of that thesis is and whether you agree with it or not, in the same way as whether you agree with the thesis around Apple or Microsoft or whoever it might be. And frankly, the valuations in some tech stocks is pretty wild at the moment. And actually, Bitcoin is front running that and looking, a little bit more keenly priced. I think there's definitely something in that for sure. I did want to pick up on, go on, Dan.
I was going to say it. The last time I checked, Palantir was trading at a 600x price to earnings ratio.
Yeah, I mean, those numbers are scary, Dan. They really are. Even the Bank of England have come out today and said, look, we're concerned about these valuations. It does feel like they're divorced from reality. So to your point as well, sorry to cut in, but, it's like Bitcoin is often, crypto generally is often sort of, people its detractors will say, well, it's not based on anything kind of real or that it's kind of all made up pie in the sky numbers. And when you're quoting multiples of that size, if the shoe fits on that side, I think people, those numbers don't feel like they've got any real sense of gravity in them at all. And so, with worries, the jitters are growing, and understandably so. And I suppose it's, it's one to watch for sure.
I mean, the based on nothing argument is the one argument that I've kind of never really been that interested in hearing, frankly, because Dan, I'm sure you've got strong views on this as well, but it's like, well, gilts are based on nothing. They're based on just some agreement between one person and another that their debt is held as this and that, the other. Gold is based on nothing. It's just a piece of metal that comes out of the ground that we've all agreed is worth money. Nothing is worth anything if you start being nihilistic about the valuation of things, right? We can make it ludicrous.
The inherent value argument is one that I really enjoy, right? So I would highlight the difference between Bitcoin and everything else that you just said there to Apple stock, Palantir, whatever it is. Bitcoin, because Bitcoin is finite, it's what separates it, right? They can always create more stock. They can always create more debt, et cetera, right? But the inherent value one is, I absolutely love it, right? So gold has inherent value, apparently, because of its industrial use and jewelry, right? Apple stock has inherent value because it pays a dividend, right? But inherent value comes back to the person that values it, right? It's a personal opinion of inherent value. I personally believe Bitcoin has inherent value because of its finite nature. If you're drowning, right? If you're in the middle of the Atlantic Ocean and I turn up and I'm like, I can give you 3 things. I can give you a rubber dinghy, a kilo of gold, which is 100 grand, or I can give you £1 million worth of Apple stock. which one do you want in that moment, right? The inherent value is the rubber dinghy worth 20 quid. It's not the millions or hundreds of thousands of pounds of the other things. So inherent value is, beauty is in the eye of the beholder. You decide what is inherently valuable to you, and Bitcoiners do.
Well, on that, Dan, actually, maybe I'll take the risk and try and hold on to the £1 million worth of stock and see if a ship comes by. But it's all about your attitude to risk there, isn't it? But there we go. No, it's a compelling argument and makes tons of sense to me. I think, we can, like you say, Ed, we can all get a little bit too theoretical about all of this at times. Like the track record's there, right? So it's a serious asset and it has values.
You mentioned a little bit earlier, I did want to ask you a bit further about these Bitcoin treasury companies, because ones like Strategy have been in the news quite a lot recently, especially kind of the concerns with basically being over leveraged. It boils down to being over leveraged against Bitcoin effectively. Have you seen much? It's almost not like a Bitcoin issue. It's an issue with the way that they're structured and what they're doing. I don't know. Do you have strong feelings on those companies?
I will confess to having not done enough reading as much as I should have on those companies. It's just a matter of time. There is FUD around them, right? So every cycle we see FUD. FUD stands for, it's an acronym, stands for fear, uncertainty, and doubt. This cycle seems to be quantum computing and Bitcoin treasury companies. As we record this, I think Michael Saylor, the CEO of Strategy, actually chairman now, I don't think he's CEO, chairman and founder of Strategy, came out literally yesterday, I think, and said that they've put 21 or 24 months of dividend payments aside in cash. So if we are to see a repeat of the 4-year cycle and Bitcoin draws down, typically Bitcoin has never drawn down below the miner's cost, the miner's electricity costs, right? It's wicked below it very occasionally. The miner's electricity cost at the moment is about $70,000. So it costs about $70,000 to create a Bitcoin on average, to mine a Bitcoin. So historically, we would expect Bitcoin not to draw down below 70,000. But it may do, right? First time for everything. I believe Strategy are fine all the way down to like the single thousands, I think. What I think personally is happening is Strategy are redefining what finance is. And it's so new to most people, certainly Keynesian economists, that they don't understand it, so they attack it. That being said, as I say, I haven't done enough research on it. I don't know the difference between Strike and the other, they've launched 3 or 4 different Bitcoin bonds, and I don't really know the difference between them other than they've got different dividends, different coupons, I think.
Look, for me, it underlines the point that, and this comes back to kind of what we were talking about before, is like why it matters that the FCA lifted the ban on the straight crypto ETFs. Is these Bitcoin treasury companies, be it Strategy, be it other ones that have popped up, they may or may not be good companies. Whatever they're doing inside their balance sheets and all everything that they get up to is an open question, and it requires people to do research to understand whether what they're doing is being done properly. Again, Strategy might be doing a fine job. Other ones might be doing a fine job too. Some might be doing stuff that's not great. It's difficult to see inside that because you're buying a vehicle that's layered over the asset in a weird way, right? Whereas holding the ETF or just holding the coin in a wallet, as it was designed to be done in the first place, it's much more straightforward, right? And having access to that is essential in removing the complexity of ownership.
I think you're absolutely correct on that. And the way I see this is the same way that financial advisors would look at their clients' current portfolios, which is you've got your vault and your engine. Some people call the engine the playpen, right? So your vault is where you protect your purchasing power. That's your global equities, right? And then your engine, your playpen, is where you try and outpace the market, because, there's data to show that I personally believe the real rate of inflation is about 12% a year, right? Which is the cumulative number of global debasement, 8%, plus global inflation, headline inflation, 4%. And that figure tracks really well with the performance of the NASDAQ and the S&P since 2008, right? So basically liquidity, money printing that we put into the markets, you end up getting about 12% return a year. That's essentially the cost of capital. So if you've got your vault is in your global equities, that's where you're protecting your purchasing power. You've got to try and beat that 12% figure with your playpen, with your engine. And the size of your vault versus your engine depends where you are. If you're in decumulation, you're 70 years old, you're probably happy just maintaining purchasing power, right? You've got 1 or 2% in your playpen. If you're 30, you probably need to be growing faster than that 12%, right? And I think that's where we'll get to within our crypto pots. So you'll have a large percentage which is in Bitcoin, either through an CETN, a crypto ETN, or chain, right? So right? So you'll have maybe your total crypto pot, 80% of it's Bitcoin, half is on chain, half is in an ETN. And then your other 20%, you can start looking at, I don't know, unicorn fart dust, right? And or Ethereum, and or that's where you can also, within your playpen of your crypto pot, that's where you can start playing around with Bitcoin treasury companies as well, because they are essentially a leveraged play. So you're going to get more volatility to the upside and to the downside. So personally, I'm a big fan of the likes of MicroStrategy, SmarterWeb in the UK. There's a new one. At the time of recording, there's another one IPOing in a couple of weeks called XCE. I like them because I like volatility and I can handle it to the downside. But if you can't, then, just staying in something like Bitcoin, which is still a Vol 50 asset now at the moment, Vol 40, Vol 50. So it's still highly volatile compared to the S&P. But the fundamentals with Bitcoin, as you mentioned, Ed, the point of Bitcoin is and was launched for it to be both store of value and money, unit of exchange, that no one can take from you. There is no third-party counter risk. And as soon as you start layering on crypto ETNs, Bitcoin treasury companies, you are removing from the thesis of why it was invented.
Can't believe that you're onto Unicorn FD as well, Dan, by the way. I thought I was the only one to come across that particular to the moon stock.
Okay.
There we go.
As a very sensible podcast, we don't advocate that kind of investment here. We're not providing financial advice. So
absolutely not. No, absolutely not. Don't Google it either.
We're all pound cost averaging sensible amounts of our monthly earnings into sensible investments for the wider public, obviously. Actually. Absolutely. Yeah. No, it's really interesting. My feelings on Bitcoin haven't really changed. I think it's funny to watch when you do have drawdowns in the price, to have all the kind of the same people come out and saying, oh, look, it's all over, blah, blah, blah. And it's like, well, it's just not really how it works anymore, is it? And it's underpinned by so much more now that you can't wish it away, basically, just because you don't like it, is kind of my feeling on it.
There's some interesting stats out there about the amount of times that there's been headlines that essentially say Bitcoin is dead, right? And going back 15 years. And I think if you'd have invested $1 at each time, and I think it's either in the hundreds or the low thousands of those headlines going back over the last 15 years. But if you'd invested $1 at each time, it'd be worth millions, and you'd have invested like $2,000.
The counter-cyclical headline strategy, that could be one to adopt.
Do you know, it was funny. I had a funny thought come into my head the other day, because I've grown up as an internet native, right? I've used it pretty much since I was a kid. I was probably about 14 years old when I got my first email address and stuff like that, and actually still use the same personal one that I have since back then. And I decided to, because if I have a frame of reference anywhere in my life for things I've done on the internet, it's probably through my email. So I decided to search the word Bitcoin to see when the earliest mention of Bitcoin came up in my emails. And do you know when that was? And it really hurts, this does. 2013, somebody mentioned Bitcoin to me.
Wow.
2013. Wasn't even a financial journalist at that point. I was just an idiot.
Now you're a financial journalist, and no, I'll stop there, Ed.
No, I'm a financial journalist with no money, and no Bitcoin. Yeah.
I had a good friend of mine try and orange pill me from 2012 through 2020. It took 8 years for it to take root.
But it's not too late, Dan, according to what we said here, right? You're still dollar cost averaging your way into all of this, right? There's still, in your opinion, and we stress that, of course, not financial advice, but you think there's road to run yet here, right? In terms of where the asset's going. And
well, so let's look at the fundamentals. Within the last fortnight, 95% of all Bitcoin has been mined, right? So that's 19.95 million. So there's 1,050,000. Yeah, I think it's something like that. Remain to be mined, right? We're currently mining 3,000 a week. There is a halving, or there will be a halving roughly 2028, 2032, 2036, and 2040. So over the next, whatever that is, 15 years, there'll be 4 more halvings. By 2040, we will be mining, I think the figure is 190 a week. As I mentioned earlier, Bitcoin treasury companies alone at the moment are hoovering up 10,000 a week. So you only need a modicum of demand, a modicum of people realizing what's coming and not releasing their coins until it hits a price where they feel comfortable releasing their coins. So for me, the fundamental remains the same, which is because this is the only finite asset we have ever created, with the possible exception of art by deceased artists. The long-term fundamentals would suggest that with any modicum of demand, price has to go up when measured in fiat.
Say about your point about deceased artists, somebody in the comments on the last episode, Dan, did say there's always more artists dying every day.
Yeah,
Might
exactly.
not even work for that.
I think I remember reading that actually. And yeah, so even if artists don't die every day, I mean, I used to date an art history student years ago, and she said there's essentially a cabal of about 10 people globally who decide what's cool within art, right? Mm-hmm. So you've either got to make it into that cabal or not. So that cabal can always just suggest, well, there's 2 or 3 more new artists that are cool. Right. So there's always art. It's just that we can't make more of the dead ones. But we can always say that this thing is now cool by this artist and their price goes through the roof and becomes a store of value. But you know, why do billionaires put their money into art and then store it in free ports? It's not to look at. It's because they're hedging against uncertainty.
Someone did once tell me that it was a sophisticated form of money laundering because you're taking it out of cash and putting it. I can't remember what it is now. This is too esoteric an anecdote for me to remember off the top of my head on a Tuesday afternoon. Yeah, interesting, really, really interesting. Dev, sorry, we've gone off on a tangent here, but I feel like it's always good. Great. Well, I think there's a really positive message in that. It's that we need to keep your noses clean, keep working at it. 2026 is another year. There will be ups and downs, and there's always more to come. There's always more money printing, Dan, right? There's always more money printing.
Always. So I think we are, as we record, 2 days into December. Officially, the Fed ended QT on the 31st. I don't know how many days are in November. 3 days ago, the Fed ended QT. That apparently takes anywhere between 2 and 6 weeks to be felt by the market. So, and that would align well with, you know, my personal thesis of the weekly cycle low, which is that we're going to see liquidity coming into the market just at the ending of QT within the next fortnight to 6 weeks. So hopefully it's a very good Christmas for all assets.
Brilliant. Well, on that positive note, thank you, Dan, for joining us again. It's been a real pleasure. We look forward to speaking to you again in 2026, see how you're getting on, see how things are going in the world of Bitcoin. Chris, thank you too for joining us ever.
Always a pleasure.
Thank you, everybody, for listening in. Do give us a like. Please subscribe to the channel and give us your thoughts on what you think's happening with Bitcoin at the moment. We're always very keen to hear about it. We do talk about it as well. So, yeah, do let us know. Thank you, everybody. With that, I shall say goodbye. Thank you and goodbye.